Good afternoon, guys. It's Workin, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollar. This is the one-day chart on Bitfinex. And, obviously Bitcoin, we talked about this, guys. It had broken out of this larger wedge here, but it was still continuing to create a series of lower highs, higher lows, getting squeezed tighter and tighter. I told you it was creating kind of a wedge within a wedge pattern here. That's exactly what was happening. And as it was approaching the apex of that wedge, guys, we were kind of all eyes were on this area right here. And of course, we did get that major breakdown, expecting that larger move anytime you get to that apex of that wedge. Obviously, we were hoping that price might break up. We did not see that at all. We've been seeing altcoins all stack up, all looking like they're getting ready to break out, guys. It was this large move was no surprise. We were prepared for either direction, a breakout up or down. Unfortunately, we did see that breakdown. And where would we find support? I told you guys last time that I was not interested in buying Bitcoin at all until we got some resolution. And I told you if it did break down, that the area I was going to be watching was down here between 62.80 and 63.80, this $100 range. Coincidentally, price did break down, hit that area perfectly. And bounced back up, wicked right below this 62.80, immediately got pushed back up by the bulls, and here we sit right on top of this support area. The 62.80 support has acted as support numerous times in the past. We are back to trading within that range that we've been trading in for the last few months, between 65.40, 62.80, right in here. If we look at volume profile over here, we can see that that's been, the majority of trading has taken place right in this range here, between 65.40, 62.80. So it's no surprise that we're right back into that zone, guys. And the question everyone's asking, of course, is, have we seen bottom? Obviously, guys, this was a very bearish move. This market is so incredibly manipulated, guys. The volume is so incredibly low. And even though we've had a spike in volume over the last 24 hours, obviously that was all selling. We're still sitting at, for the day, 4.8 billion, which is incredibly low for Bitcoin. I told you guys before, to know that new money is entering the market, and of course we need new money to enter the market for any kind of sustainable bull run. We need to see volume, daily volume, consistently above 10 billion. So it double what it is right now, consistently on a daily basis, for us to know that new money is entering the market. So as of right now, this is heavily manipulated. If we come over here and we look at short positions, let me get to shorts. There we go. Short positions. This is on the daily. Shorts have been continuing to rise over the last couple of weeks. We can see that, or at least over the last week and a half, I should say. No, actually, the last couple of weeks. And we can see, of course, today is no exception. They certainly have did a nice little spike today with that drop in price. So if we look over at long positions, longs are falling off the board. Again, you would expect that. So retail expects this thing to go much lower. Remember, trading is a zero-sum game. For someone to make money, someone else has to lose money. And so if retail expects this thing to go lower, if everybody is betting that the market is, if everyone's going short on the market and expecting this thing to fall out, market makers may just turn this thing right back around, at least temporarily, bring price right back up. So we'll have to wait and see kind of how this ends up playing out, guys, but it is no surprise that 62.80 was a very relevant support. I'm not entering any positions, guys, at 62.80. I'm kind of taking a hands-off approach, waiting to see what direction this goes. If we get some consolidation on top of 62.80, I might consider entering into a small position here. If you are wanting to go long and you're looking for an entry point, this isn't a bad area to consider slowly start to dollar cost averaging in. I would certainly not go all in at all, knowing that price could end up collapsing here. So I would, whatever amount of fiat you have, I would enter them in maybe 10% of the amount of fiat you have, 10% of your position here. If it drops to 6,100, maybe deploy another 5 to 10% there. But if the bottom falls out and we end up creating new lows for 2018, you want to make sure you have some fiat on the side to take advantage of that. And if that never happens, again, all this is a game of probability. If we end up turning around and this thing goes on a bull run that we're all waiting for, and you didn't catch the bottom, that's okay. You didn't lose any money. Remember, this is all about protecting your capital and not losing money. But if we do end up dropping to those lower prices, you want to have some money to take advantage of those lower prices. So I would be cautiously waiting to see which direction market makers are going to take this. Now, all eyes for me are on 6,100 right now. 6,100 was the prior low. If price drops below 6,100, guys, that's going to be a very bearish sign. If 6,100 does break down, I think we're going to quickly drop to the 58.50, somewhere thereabouts, guys. Quickly retest that 2018 low. And at that point, we're going to have to wait and see if that 2018 low breaks, guys. I think it's going to be a rather quick drop, possibly to 5,700, possibly even lower than that. But let's wait and see. We're obviously nowhere near there yet. But I do believe if 6,100 does break, it'll be a very quick drop to at least 5,900, 5,850, somewhere thereabouts. What's interesting to note is if we go back all the way to, let's see, if we go back all the way here to August, or excuse me, to June, we can see since June, since this low was established in June, and this was the low, June 24th established the low for the 2018 low, and on Bitfinex that was about 5760, I believe it was, somewhere thereabouts. I believe 5760 was the low on Bitfinex, 57.55 was the low. And since then, guys, every time prices come down, it's created a higher low. So price came down here. 58.50 was the low. So a higher low. Price came down here, created another higher low. Let's wait and see if this was the low, and that's a big if. That would be in line with this trend of creating that higher low, higher low, higher low. Doesn't mean that's going to, and that's why if 6,100 does break, that's going to break that trend, and that's going to be a very bearish sign, guys. And at that point, I do think, as I said, we're going to come down and test that 2018 low again if 6,100 does end up breaking down. Now, looking at the bigger picture, always keeping in mind the bigger picture, as I've shown you guys many times here. Obviously, every single rally here has been a little less impulsive, a little weaker. We can see that not only was price reaching the apex of this wedge here, expecting that larger move, but coming out here, looking at the big picture, we can see this descending resistance line here, or this larger wedge that price has been in. We also hit that descending resistance line, which we would expect to break up, or of course, a bounce to where price broke down. Unfortunately, it did break down. Now, where is it going to find bottom? If we look at this prior low here, going all the way back to February, and we say, okay, where's a logical place to find bottom? Well, we established, obviously the low was down here around 6,000 by just a wick here. But if we look at the body of these candles and say, okay, where's a logical place to expect a low from that lower structure? Price came back up, came back down. Where did it find support? Found support right here. Right just below the body of that prior low, that prior order structure. That's where it found support, right in there. Now, there's one exception to that, and that was the next area. Price came up, came back down. What happened? It created a lower low. It fell well below the body of these candles here. But that was the only exception. If we look at price came from here. Price came back up, came back down. Where do we expect it to find support? Right into this order block right down here of the prior low. Where did it find support? We zoom in. We can see it found support. Price came back down, wicked just perfectly right into the order block of that prior low, and then it bounced right back up. What happened the next time? If we look at the order block of that next low, which was right down here, price came back up, came back down. Where do we expect it to find support? We look at that again, right below that order block, and where did it find support? Right at that order block. Price came back down, boom, wicked just into that order block, and then ended up coming right back up. Now, again, a little less impulsive each time, but if history is any guide, where do we expect this thing to find support? If we zoom in here, we would be watching this area right here. Take into account these wicks, we'd be watching this area right in here. We expect it to come down, possibly wick into this zone, possibly coming as low as 6,100, which would be the prior low of this order structure right here, and then bounce right back up. Now, is that going to happen? We'll have to wait and see. But if that area does break, guys, that's what I'm saying. This could quickly fall down to at least the 2018 lows of 58.50, somewhere thereabouts, guys. But as long as we stay above this zone, we're just continuing to follow that exact same pattern. The difference this time is this pattern is going to have to break. Even if we do end up getting a little bounce off this zone, we're of course getting closer and closer to the descending resistance line of that larger wedge here, and it's either going to have to break out of that wedge or we're just going to break back down. And if it does break back down again, obviously we're going to have to take out this prior low. That pattern is no longer going to be intact. And at that point, guys, we're either going to come back down and create a new 2018 low, or we're going to come down, create a very strong reversal, and this thing is just going to crash, not crash, this thing is just going to impulse right back up out of this wedge here. And at that point, I think that possibly starting a new bull run. That being said, if we, again, keeping an eye of the bigger picture, if we do end up creating a new 2018 low, we go all the way back here to this order block back here, all the way back into December of last year, November, December of last year, even October of last year, we created a very strong supply zone, or excuse me, demand zone zone, a lot of buy orders. If we look back here, guys, a lot of buy orders that are sitting here between 57.75 and 54.50. So if we do end up creating a new low, I would expect somewhere between 57.75 and 54.50, somewhere in there, to find some kind of a nice reversal, a nice impulse wave up to take us out of this bear market. Now, if 54.50 does end up breaking down, and that's a real possibility, guys, if 54.50 does break down, this is the area that I would expect it to break down to, somewhere between 4,600 and 4,400. There's not a lot of support between that 54.50 and that 4,600 area. However, that being said, I would expect this is the ground floor, in my opinion. This is where I would hold your fiat, and this is where I would deploy most of your fiat. So if you deploy if you deploy a lot of your fiat up here, say if you deploy, say, 30-40% of your fiat up here, I would keep 50-60% of your fiat to try to take advantage of these prices down here, if it ever does get down here, guys. And that's a very big if, but if it does, you want to be able to take advantage of those prices. And if it never does get down in here and you never did deploy that fiat, and you say, well, I wish I would have, I should have bought down here. No, you shouldn't have. Remember, as long as you don't lose money, you haven't lost anything. You didn't lose. Just because you didn't catch the bottom perfectly does not mean that you lost. You still made a very sound decision. As long as you don't lose money, guys, then then you're a winner. There's going to be so much opportunity in this market going forward when we do get that bull run, and you do not have to catch the bottom. You definitely don't have to catch the bottom. There's going to be far too much opportunity going forward. Sorry, guys, had to pause the video there real quick. All right, so wrapping it up, guys, what am I watching? I'm watching, as I said, guys, we have kind of this wedge within a wedge. I'm going to be watching 6,100. 6,100 is going to be very relevant. If 6,100 does break down, as I said, guys, at that point, it's going to be a free fall, I think, down to 58.50. This is the area I would expect a possible reversal. If this thing is all a bull trap, somewhere between 6,280 and 6,100 is where the reversal is going to come, somewhere in this zone. That's where that reversal is going to come, possibly trapping people into their long, as again, we can see that longs dropping off, shorts continue to stack. If this trend does continue with shorts continuing to stack like this and longs continuing to drop off like this, I do believe that we may get a short squeeze, and I do believe market makers may, somewhere in this area between 6,280, 6,100, somewhere they're going to end up turning this thing right back around. That's a real possibility. That being said, 6,100 does break down. This is the area where I think we're going to fall down to. Looking to the upside, I do think today, the max upside for today, in my opinion, even if we do get a strong reversal, I do think the max upside is going to be right into this order block right here, right here. This order block right here, guys. I do think this would be the max upside here, so that's going to be between about 64.80 and 64.50, somewhere thereabouts, guys. This, I'd be surprised if we got anywhere above here for the day. If we do end up breaking above 65.40, I'm going to start to get excited. If we break above 65.40, guys, this 65.40 should act as a very strong resistance if price ever does get back up there. It should act as a very strong resistance. So I would, any move that's up, I would look at as a possible stop hunt, possibly trying to liquidate shorts, only to bring price right back down. If we breach 65.40, then I'm going to start to get cautiously optimistic, start to think that this thing may have been a complete bull trap, and obviously be watching for price to continue right back up. So we need to breach 65.40. If I'm south of 65.40, I'm bearish. If I'm north of 65.40, I'm going to be bullish. That's just the way it's breaking down right now. That may change, but as of right now, that's what I'm watching. Of course, we're continuing to keep an eye on this 62.80, 6100 zone, knowing that that thing could end up breaking down at any moment. Max downside for today is, I do believe, would be 6100. I'd be very surprised if 6100 did end up breaking today. I think right now price is just kind of sitting here waiting to see which way it's going to break, but I do believe 6100 would be the max downside for today. I'd be very surprised if that did end up breaking. If that does end up breaking, guys, then of course we're going to come back down. As I said, 58.50 is going to be the major low, and that's going to obviously be an extremely bearish sign. That being said, do not get depressed here, guys, at all. The fact that this is starting to move, the fact that there's really nowhere else to go, the fact that this larger pattern is just a matter of time before this larger pattern does end up breaking down and we get some resolution, finally get some resolution on what this thing is going to do. Even if that resolution means price has to drop down to new 2018 lows, that is not a bad thing. We need to get resolution. We need to get out of this pattern, this repetitive pattern that we've been in for all of 2018. And if it requires us going to much lower lower prices to do that, so be it. There are going to be some buy orders waiting down in here to scoop it right up. Institutional money is coming in down the road. It's inevitable. So do not, as I said, guys, do not get discouraged by this. This has to happen, whether it breaks up or breaks down. This resolution, the ending of this pattern has to happen, and the fact that we're starting to see movement and starting to get direction and starting to see that this thing is eventually going to, this can't continue, this pattern will break, that is bullish. That is overall bullish. Even if it's temporarily means new in 2018 lows, overall this is bullish. Overall we're one step closer to a resolution in all of this. So I would just say keep fiat on the side. So if price does end up breaking down, you could take advantage of very low prices. If it never comes, so be it. You just don't want to lose money. Protect your money. Do not lose money. Do not make stupid, irrational decisions. So I'm going to go ahead and wrap it there, guys. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, I would appreciate an upvote if you have enjoyed this content. Until next time, guys, please trade safe. Take care of yourselves. This is Workin, signing out.